Today, I want to talk about something many first-time homebuyers don't fully understand until years later: down payment assistance programs. And before I start, I want to be clear. These programs can absolutely help people become homeowners. For many buyers, especially in this market, they can make home ownership possible sooner rather than later. But what people don't realize sometimes is there are strings attached, and those strings can affect when you sell, when you refinance, whether you can rent the property, and sometimes even how much money you walk away with later. Here's why. A lot of people hear the phrase down payment assistance and assume it means free money from the government. But many of these programs are actually structured as deferred loans, silent second mortgages, or forgivable loans, meaning you may not have to make a monthly payment on that assistance, but there's often still a lien attached to the property. And that's the part many buyers don't fully understand at closing. Some programs require you to live in the home as your primary residence for a certain number of years. So if you sell too early, move out, turn the property into a rental, or refinance improperly, you may have to pay the assistance back, sometimes immediately. Now, every program is different. Some are forgiven gradually over time. For example, 20% forgiven each year over 5 years. Others may require a full repayment if the home is sold before a certain date. And in some cases, although less common, there are programs tied to appreciation where the provider may share in a part of the home's increased value. And here's where it becomes really important in today's market. A lot of buyers are purchasing homes today with the hope that rates may fall or drop later and they'll refinance in the future. But some assistance programs can complicate the refinancing. Certain programs require approval before refinancing, lien subordination, or repayment of the assistance balance altogether. So homeowners sometimes discover years later, wait, I can't refinance as easily as I thought. Now again, I'm not saying these programs are bad. In many situations, they're extremely helpful. But buyers need to understand there's a difference between a true grant and a loan that simply doesn't require payments right away. And as a real estate agent, I think this matters because many people are focused on, can I buy the home? And they forget to ask, what happens later? What happens if I relocate? What happens if I upgrade? I need to refinance. I inherit another property and I decide to turn this into an investment home. Those were important questions. And honestly, this is part of a bigger conversation happening in real estate right now. People are finally starting to understand that affordability is not just about getting into a house. It's about understanding long-term structure of ownership, the financing, the taxes, the insurance, the restrictions, and the future flexibility of the property. Because the best real estate deal and the best real estate decisions are not just about today, they're about protecting your options later. I'm George Latos, helping you move smarter, not just faster.